two things. One, the companies we've heard from are not necessarily representative of the whole market, right? So I would say it's a little too early yet to extrapolate and say this is going to be the trend for the season. But also, and secondly, I think everyone's wondering, is this the end? Are we at the end of the cycle? And even if we get a beat here, can this continue into 2019? And so that's why I think a lot of the focus is going to be on guidance, on outlook, because that's going to dictate what multiple should I be using to value equities next year.
Of the stocks that have reported, which ones do you look at as bellwethers for what comes next?
You know, I look at a bank, right, and say, what are they saying about credit card spending? That tells me something about consumer spending. We're going to hear more from some of the consumer companies this week.
In which case you'd be bullish.
Yeah, I actually feel pretty good from what we've heard so far. We're going to have 30% of the S&P market cap report this week. So this is really the definitive week to make a call on what's going to happen, I think, over the next couple of weeks. We've seen a lot of volatility, but at the end of the day, we keep bouncing back from these technical levels. And so that tells me that I don't think we're at the end of this cycle. Probably got a couple years left is our view. And by the way, equities still perform well in the last couple of years.
You're talking about the economic cycle or the
yeah,
stock
correct.
market cycle,
Yeah,
or both?
right.
Yeah.
Jeffrey, you want to make a call this morning?
Yeah, I think she's spot on. I think we're not in late cycle. I think that the decline was so severe and the recovery so muted up until a couple of years ago that you're still in mid-cycle. And I do think you have a few years left to go. And I agree that it's too early in the earnings reporting season to actually make a definitive call right here. I think earnings are going to still come in pretty good around, I don't know, 160 for the S&P, 180 next year, 200 for 2020. And I think the market bottomed.
Do either of you have a worry about the slowdown in China in terms of the numbers we saw late last week and whether you think that's going to have an impact going forward here?
You know, my view for equities is predicated on growth. So if you believe what's happening in China or what's happening in Europe stalls growth in the U.S., then yes, because I'm not expecting multiple expansions. Everything's going to come from earnings growth. I just don't know yet that what's happening in China is enough to completely derail that high single-digit earnings growth.
Oh, I would also kind of add that the China story is interesting only because it took a massive amount of rhetoric and saber rattling from the central bankers, from the policymakers there in a command and control economy to say that they are going to support whatever is going to happen. And that's going to be government, straight up government intervention in the markets over there to make sure that things don't crash. If that is the case, you're talking about one of the biggest balance sheets in the world looking to support a stock market. And if that is the case, then maybe you can say that the U.S. companies may not be as impacted. That's the bullish view, at least for right now. The bearish view here right now is China has been due for this kind of a slowdown for a while.
Hey, Jeffrey, give me a sector you like and a sector you don't like as a function of what you've heard in terms of earnings that have already come out in the past week and a half.
I like the energy sector. I think the valuations there are about the same level they were when crude oil was 26 bucks a barrel and crude oil is over $70 a barrel. So I like the energy space, and I like the financials.
And what have you turned your nose at over the past week or two?
It's not just been the past week or two. Not real happy about utilities and not real happy about consumer staples. Think they're expensive.